Greetings, dear friends. It's important to keep in mind that the cryptocurrency market is still moving sideways after going through a major correction after the November rise. The cryptocurrency market has yet to fully rebound, and regrettably, a number of altcoins are still selling much lower than they were in January, December, and January of this year. In terms of market capitalization, XRP is currently lagging behind Tether and hasn't been able to catch up. With a current price of $2.38 per token, XRP's market value is $138.5 billion. It's interesting to note that the price of XRP would currently be between SHIU-4 and I-5 if the token circulation had stayed the same as it was during the cryptocurrency boom in 2017 and 2018. From roughly 25 to 30% of the entire supply in circulation in early 2018, circulation has grown by almost 100% to reach almost 60% now. The price of XRP is hence inherently diluted. However, as institutional investors continue to amass XRP, David Schwartz predicts that the remaining escrow tokens will soon become rare. Since the escrow releases are only expected to last until 2027, the monthly releases of 1 billion XRP, of which 20 to 30% reach exchanges for liquidity support, will have ceased by then. Due to investors' uncertainty about whether to get into the market sentiment is still scared rather than neutral. While XRP and XLM saw robust growth as Bitcoin soared from $16,000, a number of other altcoins did not perform as anticipated, leaving many dissatisfied. Hedera, HBR Stellar, XLM, and XRP were the only companies that produced the 5, 7, or even 10-fold gains that many investors were looking for. Although it was not in my portfolio, Cardano, a D, can possibly be part of this group. I held XRP and XLM instead, and although they did well, the returns from my other holdings were not as high. In retrospect, I may have overinvested in XRP and XLM rather than diversifying, but it's dangerous to put all your eggs in one basket. The price behavior of XRP is still below the 50-day moving average. A bullish continuation towards $3, $3.50, or perhaps $4 would be confirmed by the several attempts to break above this level. But even with good fundamental news, like Trump declaring that XRP would be added to the strategic reserve and Ripple winning its lawsuit against the SEC, there has been a slight rise in price. This implies that news events are being used to sell XRP. Technically speaking, the current state of the market is consistent with dynamics of accumulation and profit-taking. The selling pressure is explained by the fact that large investors who bought XRP in 2022 or before are probably spreading their holdings. Nevertheless, I continue to think that XRP has a lot of upside potential, but patience is needed. A negative trend is indicated by the fact that Bitcoin has dropped below both the 50-day and 200-day moving averages. Similar circumstances happened in 2024 when Bitcoin too fell below these crucial levels, briefly traded sideways, and then started to rise again. Since I think the bull market is still going strong, the same thing might occur with XRP. The market will eventually rebound, perhaps when most people least expect it, even if we might witness more price drops in the near future. It is advisable to wait for the adjustment to finish for the time being. The market's trajectory is still unclear, despite the fact that technical indicators can offer some insights. Given that several cryptocurrencies are currently at attractive prices, it may be wise to average into positions during dips if at all possible. In a formal letter to the SEC, Ripple has urged the organization to draft more precise crypto legislation. Bullish for XRP and the industry overall, Ripple contends that regulators should adhere to current regulations rather than arbitrary new ones. Businesses can operate with confidence when regulations are clear. Ripple's stablecoin, Relust, is gaining popularity despite expansion being hampered by uncertainty. The supply has now reached $160 million, and an increasing number of Ethereum addresses are holding the token. Built on the blockchains of the Ethereum and XRP ledgers, the desire is becoming more and more popular. In 2018, Ryan Zagoni of RippleOut said that the largest obstacle confronting XRP was not technical problems, but rather regulatory ambiguity. This assertion is supported by Ripple's most recent SAC filing, which highlights the necessity of precise rules to guarantee an even playing field. It's interesting to note that the SEC just lately affirmed that proof of work PAL cryptocurrencies like Bitcoin and Ethereum Classic are not securities. This is good news for assets that rely on PW. May still require evidence of work. You would also like to comment on this, just like Ryan did. Ahead. Proof of employment is ineffective. Proof of employment is ineffective. Ryan, please finish. Additionally, a large number of developers split off to produce other assets in the early days of Bitcoin, like XRP. It doesn't require money, is more energy efficient than Visa, and can do 1,500 transactions per second. Many of these issues have been resolved already. Adoption is a problem that returns to policy. Adoption has been hampered by the policy ambiguity surrounding some of the assets, especially in the US. And since we use XRP and Ripple because it costs half a cent every payment, I'm speaking from those two assets. It's essentially free, is effective and scalable, the 1,500 transactions. The second is that almost no energy is burned. As a result, we are now at a time when all of these problems have actual solutions. Policies become difficult to implement. On the first panel, we learned about China's centralization, which Peter would find difficult to accept. 6 mining pools, 5 of which are located in China, control 80% of the Bitcoin mining power. Even though Bitcoin and Ethereum are platforms under Chinese control, there is currently policy certainty for them in the US. As a result, those platforms see activity. From the standpoint of US policy, we must examine the areas where uncertainty exists. One platform that speaks directly to me is XRP, which is similar to Bitcoin in appearance, decentralized, open source, and has a relatively limited validation power of 7%. Those that are highly comparable to Bitcoin and Ethereum share similar traits and should be categorized similarly are being clarified by grouping. Next, we're establishing a level playing field for all cryptocurrency. By no means I anti-Bitcoin or anti-Ethereum. Both have a lot of amazing potential, but we need to level the playing field so that the market may choose which of them to utilize and not be constrained by legislative uncertainties today. Additionally, Ripple has obtained a license to conduct business in Dubai's DFC zone, where XRP payments are now formally accepted in this significant international financial hub. Brad Garlinghouse, the CEO of Ripple, recently expressed optimism that an XRP ETF will be approved this year. BlackRock may also invest up to $9 trillion in XRP, according to rumors, albeit this is only conjecture. Before drawing any conclusions, we must wait for BlackRock to formally submit a proposal for an XRP ETF. Major banks in the US are apparently evaluating XRP for internal storage as part of the growing digital asset custody service known as Ripple Custody. Furthermore, there is conjecture that XRP might be incorporated into a $1.50 trillion cross-border settlement system that is connected to the blockchain agenda of the Trump administration. Now that XRP payments are accepted in the Japanese real estate market, developers in Singapore and Dubai are reportedly keeping a careful eye on XRP's integration, suggesting that more uptake is probably in store. In conclusion, there is now a lack of clarity in the Bitcoin market. Altcoins are having difficulty regaining traction, and the overall market capitalization is still below the key $3 trillion line.